Hello everyone, today is Tuesday, August 4th, 2020. My name is Evan and welcome back to another midweek market recap video. We're going to jump right into our market technicals dashboard. You can see basically a sea of green here this week to kick off. It's only Tuesday, of course, but to kick off the week, kick off the new month, we've got all of the major indices up today here, about a little less than 0.5% or right around 0.5%. Seemed like most of those gains kind of came in the last hour or so of trading. The 5-day change numbers, though, are impressive here. We're seeing anywhere from about 2 to 5% over the past 5 trading sessions. You can see notably the Dow Jones, which we talked about in our last video, is underperforming, is lagging a little bit. But if we look at the Qs here, back to its leadership role, 5.34%, S&P and IWM somewhere in between. All of the major indices are above the 10, the 50, and the 200 period simple moving average. If we scroll down and take a look at sectors on the week here, technology really kind of standing out now. Of course, we had the Super Bowl event of earnings last Thursday where we had just a large number of companies, particularly high-tech growth momentum, mega cap side reporting, and that's certainly speaking to some of the outperformance we're seeing here. Communication services and consumer discretionary are the second and third slot. On the downside, biotech continues to take a breather here, so we get IBB, which is slightly down over the past 5 trading sessions, materials and financials to round out the underperformers. And on the major market front, it's natural gas really saw a sharp move to the upside yesterday coming in to start this week. Follow through today, up 17% in the past 5 trading sessions, followed by silver and gold, so very commodity heavy at the top. And on the downside, we got volatility is the only thing red, and the next two here would just both be positive. And we got the 10-year bonds, and we also have ACWX, our international market exposure, both of those positive over the past 5 trading sessions. So let's jump into the charts here. Let's try and take a look at what's going on. The weekly picture, this is what we're looking at right now. So we have a weekly chart up, we have price being the dashed white lines, and we have our smart trend filters, the colored dots that you see on the screen there. That's our custom smart trend filter indicator, and we're looking again at a weekly time frame. You can see there's been no change to the trend outlook and really anything in terms of weekly exposure for quite some time across any of the S&P, the Nasdaq, the Russell, or ACWX. If we go into a daily chart here, a couple of things that we want to talk about. So first is S&P 500. Remember in our Friday recap, we talked about the fact that we finally started to get some yellow dots printed here on our smart trend filter. That generally implies that there's some cross currents, there's some mixed signals, there's a little bit of turbulence is the kind of the term we like to use, but you can see it lasted only for about 2 days. Seems like the airplanes threw it back to the upside and breaking out to new or I guess new highs in this recovery aspect here, closing at new highs, back to a green bullish outlook here. Nasdaq in the top right, same thing here. We had again some turbulence. We had about 6-7 days of yellow dots getting printed. We're now back to the green uptrend, kind of confirmed higher here, and we're getting price rising. Bottom left Nasdaq, bottom left Russell 2000. You can see basically the same thing. Took an extra day to get through it, but after the close today on Tuesday here, you can see we've got a nice bullish signal being printed again as the Russell 2000 lifts higher. And the bottom right is ACWX, so this is again international markets minus the United States, and you can see this is still in kind of mixed territory here. Did close up almost 1% on the day, but going to need a little more confirmation just to get over this level. I think by and large, this is still a pretty constructive looking chart. And as we like to say, the prior trend direction here is generally what we fall back to and give the benefit of the doubt. So ACWX here still in pretty good shape, despite a little bit of cross currents there in the most immediate term. So if we jump into some of the price action here, we just clean up up here and go back to our regular kind of candlestick view of the S&P 500, one of the takeaways last Friday when we do our long form weekly market recap was that most of the US equity markets were range bound. So they saw good performance last week. They closed at the highs of the week, but most of the indices, if we can just sort of maybe clear this up and draw some of these recent levels in here, or just these ranges, you can see that really it was more like this type of range here that we were more closely trading in, with the highs being around 2,800. You can see we gapped up to start off the week, and so far we're holding up. If we go to the Russell 2000, we basically had the same thing. We had this range right here kind of being printed, being developed, and you can see we're starting to inch over and starting to break out to the upside. And the same thing for the Nasdaq 100. We're basically right back up to the highs here. We did close at all-time highs, but essentially we're getting breakouts in progress as we speak, as of the close here on Tuesday. So I think that is the most notable sort of takeaway. It is only midweek, so depending on your comfort level, your confirmation level of where you like to see things close and how far you want to see the breakout actually go. A lot of the times when we're looking at ranges like this that have lasted a couple of weeks, we like to see the weekly close, so Friday's close, actually break out and close over the resistance or that level that we're paying attention to. So we will, in some cases there, if you're in that camp, you'll want to be waiting for Friday's close to get that confirmation that this breakout is actually sticking here. But for those of you who want to maybe jump in a little bit early, you don't want to wait for all that confirmation, you rather sort of just get in at a quicker spot, then I would certainly be paying attention to what's developed here over the past 3 trading sessions, basically, or 2 trading sessions, because these breakouts are starting to get into motion. So for the S&P 500, it seems like, sorry, I lost my board here that I'm usually going with. So this is the view we're usually looking at here, and all the way up here at this level, you see this 32.22. If you back up here, this comes all the way and fills that gap. We talked about this, multiple times in the past month or so, but this is being a fairly obvious sort of target for the market. Of course, there's no guarantee that we would get back up here, but certainly it looks like as close as we are now, and if this breakout can stick, this is certainly a logical place for the market to sort of gravitate to and sort of test and fill and see what the reaction is. So let's keep that in our mind, and that's really the next relevant level I'd be paying attention to if this market continues its breakout, and then above that you have finally would be the all-time highs for the S&P 500, which we wouldn't see until let's see, approximately just under 3,400. Looks like was the all-time highs in February. So just under 3,400, a couple of percent away, if that. Let's take a look here, see if we can get that down. Yeah, about 3% away from all-time highs in the S&P 500. So that's what I'd be paying attention to above. On the downside, this 32.35 level, if we start losing this, if we get a sudden rug pull here, if the market rejects, reverses, and starts to expand to the downside, that would obviously sort of pop the balloon, the nice momentum that we've seen in this market, and that would certainly change my opinion, at least over the short term, and what I would consider, this market capable of doing. So if we do see some type of rejection, if we do lose this area in here, the prior high from June, and this consolidation that we just spent the past week or so then that would be a cause for some short-term concern. So let's pay attention to that. Let's keep an open mind. Of course, the benefit of the doubt right now, I think, belongs to the buyers, deservingly so. So I think they do get the pass right now, but let's see how we shake out here over the next couple of days. IWM, you can see again trying to resolve this more immediate range. Does have the prior June highs up here to deal with, up around 153. Seems like it wants to get back up there and retest it, potentially in some pretty short order. And as we mentioned just a moment ago, the Nasdaq 100 also basically in line here and starting to move to the upside. So that is the takeaway there for equity markets. Breakouts in motion. Let's see if they can stick. If we start to look at some of our other areas of the market here, we'll skip corporate bonds. We'll go to the bottom left here, which is VIX. Been on a sell signal now for 5 weeks. Based on our trend filter, that continues to work. TLT, been on a buy signal, and that continues to work. If we go down to a daily chart now, you can see it's pretty much the same thing. VIX still got a sell signal, TLT on a buy signal for the past month or so. Both of those are still continuing to work. And if we head to commodities more broadly here, GLD, again, still quite extended from its trend filter here. Same thing with silver, very extended, but these things continue to work, and this is a weekly time frame. And I do want to point your attention down to the bottom left is USO. USO has been in a sell signal here on the weekly chart for basically the start of this year, or right around the beginning of February. And notice this week we're finally getting a print up here on the yellow transition mode. When you're looking at weekly time frames, these things take lots of time to repair themselves and to get back into positioning, and that's what you've basically seen in USO take place over here over the past 3 months. Remember, if you go down to a daily chart for USO, this flipped up here back in mid-May, so this has been positive to neutral for the past 2.5 months. It's the weekly chart that's finally starting to get a little more into agreement, or at least mixed on USO specifically. So a couple of last roundup comments I wanted to make was on natural gas. So if we go to natural gas here and we take a look here at the volume that came in yesterday on Monday, and then just some more follow through. Actually, if we switch over to our trend filter view, take a look here. You can see we finally got today, the green confirmation printing here in terms of our smart trend filter. If we go to a weekly chart, this has basically been in a sell signal consistently for since December of 2019. We had a couple of brief moments in here in May where this attempted to turn up, and you can see on the weekly chart again, we're starting to potentially turn up now as well. So natural gas has been just a real sore spot here, one of the worst performing commodities over the past I guess years at this point, but it does seem to be showing some signs of life. We've seen head fakes before, so let's keep a short leash on it and keep a close eye. But for now, we're certainly getting some activity here as this follows through to the upside and soars about 15-20% just in recent trading. So natural gas, that was certainly one thing I wanted to talk about. Again, if you're looking to buy it now, it seems like it's already had a pretty good move, but to each their own. It depends on your strategy, and natural gas is certainly a very volatile name, so that thing can continue to squeeze, but it is certainly extended in the short term. I do want to mention biotech here because biotech is kind of one of the weakest that we've seen now in terms of sectors over the past 5 to 10 trading sessions. I do still like this sector actually in terms of if we go to a weekly chart, you can see this has still got a pretty good, switch over to the cleaner view here. Longer term here on a weekly chart, we spent some time talking about this in Friday's video, but we're still attempting to break out of this very, very long multi-year range. Of course, this could turn into a head fake up here, and if it does really start rejecting violently back into this range, then all bets are off. That is going to be sort of a concerning that would be a concerning development there for IBB, but I'm going to give it the benefit of the doubt. I still see opportunity here in some of these individual stocks that aren't as frothy, that have pulled back, that are still holding uptrends, that are still up strong year to date. So I still think it's a pretty interesting sector to pay attention to, certainly being under pressure as of recently. Last but not least is UUP. This is basically the only thing that's going down nowadays. Even this week, as I record this, of course, only on Tuesday, we got stocks up, we got bonds up, we got gold up, most commodities are up. The only thing that really isn't up right now is the US dollar. And this continues to, certainly nothing new, has been getting totally pummeled here over the past couple of months. But basically, this is back to negative. It tried to open up on the week here. You can see the open up we had on Monday, and effectively it's been sold off and continues to be in a tough spot. It is quite oversold on pretty much any metric you want to throw out there. So of course, in the short term, anything's possible here, but this is effectively one of the only areas of the market that we can really point to and say it's not working. Across all other assets, throw crypto in there and everything else, everything is seemingly performing at this time. So that is it. That is the midweek video. Catch you up on all of the latest moves. Let's pay attention to these markets, trying to resolve those ranges, see if they can hold it into Friday. Tomorrow we'll be back with some trade ideas. Friday's our long form market recap. Thanks as always for tuning in and watching. You can subscribe to our YouTube channel or follow us at The Trade Risk. Have yourself a great day, and we'll see you in the next video update.